You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates, and today is September 27th, which is a very happy day in my calendar because today is our 6th year anniversary between me and the missus, and our family continues to grow. You can be a part of it. Make sure you hit that subscribe button as we continue to put out fantastic content. You're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. And over the weekend and rounding into the beginning of this week, we're going to cover some great topics. I hope you're ready. You guys ready? Here we go. Number one, is the real estate market recalibrating? This comes from an opinion piece out of the Toronto Sun. We're going to dive into that. Right following that topic, we're going to discuss how bad will the fall be according to CMHC. Not the fall, meaning the fall market, the fall, meaning the fall of real estate prices. And then the big debate remains, are vacant homes blocking supply? As we talk about this vacant home tax, if you missed it, go back and listen to our last podcast where we covered that's coming. The info on that will happen around December this year. Asking this question, are vacant homes actually blocking supply? I want to talk a little bit about the counterpoints in all of that. If you're not already on our high cash flow properties mailing list, I sent one out yesterday, and in the next couple of days, I actually have an opportunity in front of me for a power of sale deal that has crossed my desk, and now I'm starting to see a lot of assignments coming through our office as well, so I might end up including those as well. So regardless of what kind of investor, if you're looking for high cash flow property or you're looking for a steal of the deal, we're talking, $70,000, $75,000 off the price on the market value because of these distressed properties, then make sure you sign up for that. You can find that in the comments down below or hit me up with a message and I'll get that to you. But as I mentioned, today is our 6th year anniversary. That means 6 years ago today, I asked my childhood sweetheart, my best friend, and the most beautiful woman on earth to marry me. All three said yes, and now we live in a happy polygamous relationship. No, me and Sandra, we've been together since we were 17 years old, believe it or not, which is 13 years ago now. Don't do the math. But we were high school sweethearts, and we were actually prom king and queen. So we've had ourselves a happy and wonderful journey, and I hope this week is a wonderful week for you guys as well. So let's jump into our topic. Number one, coming out of Toronto Sun, this is an opinion piece called "The Real Estate Market is Going Through Recalibration of Supply and Demand." So this individual talks about this conversation that he was having with a real estate agent that truly enlightened him as to what's been going on in the market. Because a lot of people are clearly confused, and with the amount of news, the vast news out there, most of which lately has been very negative, it scares people and they don't really know. Now, I also am aware, having read this person's articles very consistently, that they are savvy, but of course you got to come up with a piece. So the story is, I talked to an agent and they taught me everything there is to know about what's going on with supply and demand in our market. Here's what he says. I had the perfect experience to drive home that reality this week. A call to another agent asking for feedback on his showing at one of my listings led to one of the most interesting market discussions I have had in a while. The condo market in Toronto is strange right now. Properties that would have been snapped up in multiple offers even a month ago are sitting with just a handful of showings. It's a tough moment to be a seller and a challenging moment to be an agent trying to make sense of what's happening. Even the agents can get confused out there. Are condos and proverbial canary in the coal mine predicting the long anticipated market crash, or should we all just keep calm and carry on as this is just a momentary seize? So this is what he says. Clearly the conversation I had with Rob Ackerley, this is the agent, he's from condos.ca that he talked to. He totally enlightened this guy. Couldn't have come at a better time. Within moments, it was clear he had good perspective to share. What we're dealing with right now is a recalibration of the market forces of supply and demand. Tell me if this story sounds familiar, if this is news to you, because I'm hoping not, but it's news to apparently the news. The rental market is in decline as many of those most affected by job losses have moved home to their parents. That loss of profitability, coupled with the loss of Airbnb revenue, now has investors dumping units. Meanwhile, the demand for resale condo apartments isn't as strong. We're talking about an increase in supply, due specifically, in this case, to the rental evictions or Airbnb, making the long-term rental market difficult. combined with demand factors being down. And if I were to add to it, namely because of immigration, kids aren't going to school, all of these things. But this isn't news to you guys. It's just news to the Toronto Sun. As accurately tells it, the market right now is in a bit of a logjam. We have record inventory and many would-be buyers are sitting on the sidelines waiting to see what happens. Well, this has happened every time there's perceived uncertainty in the market. Many are trying to time the quote bottom and get in then. And we're kind of doing that too because it's fun. And that lines up with what I am seeing also. This is the individual saying this. Buyer confidence is always the wild card. We have seen this time and time again, but most recently in the early days of the pandemic, the market ground to a halt and the buyers brave enough to venture out were looking for deals. Oh, and deals did they find? That momentary seize was just a blip, it turned out. Once people realized that the pandemic discounts weren't holding, the market fired back up again. There's a lot of assumptions in here that this is going to be a direct duplicate of that. It also kind of speaks to me of maybe not timing the market so perfectly that you miss the deals altogether. But regardless, is this not what we've been talking about for months? So the main thing to watch now is what happens with the inventory balance on the condo market. We need to see how long it takes for the surge of new condos to slow and eventually absorb. Watch out. People are smartening up to the months of inventory thing that we've been talking as a leading factor of price for a long time now. If you're going to time the market, you need to be acting very fast. This is key because when I'm saying we're going to watch for deals in the condo space, that doesn't mean you're sitting here waiting for me. Oh, Bradley says there's deals. Let's go shopping. I'm going to contact my mortgage broker. You're too late. You got to be ready. If we're timing the market, you got to be prepared to pull the trigger tomorrow because things move very quickly. And this is kind of what's coming out of this article. If you're going to time it, you got to be faster. You got to be the first mover, or don't time it at all and look for when there is a deep discount, which is the case right now. It's true the landscape is different, but rest assured this market is very strong for many reasons. Increased population, diverse economy, stable political system, etc. The market is going to rebound. This sort of thing has happened so many times in the past where something causes the market to stall. The media scares everyone. Then there's a period of adjustments. And by the time the masses figure it out, prices are on the rise again. Only time will tell clearly, but I think the article believes we'll all do well to take a beat before declaring impending calamity on the real estate front. Too late. Too late. Calamity is upon us. Hide. But it's a very good point, right? Prices have risen this past year. So should the value in most properties. So one of the things I wanted to say here was this idea of power of sale. Because we had a guest on the other day talking about power of sale. Very awesome interview. In fact, it might have been the best one I've had so far since beginning the podcast. Very informative. This idea of power of sales rolling out and not being able to be kept up with through till the end of 2021. Well, recognize though that the increasing appreciating value we've experienced since March and April has really created a cushion that's in there. So though there might be power of sale deals that come up, people shouldn't be in as tight a position as they once were, if that makes sense. Now, that could be a weak argument given that we've also seen a lot of people purchasing properties with less than 20% down against the advice of the CMHC. So depending on how many people get caught somewhere in between the beginning of COVID, actually really after the market has increased, so let's say 3-4 months ago, and if the market were to come down, you could get caught with your pants down and with your doors open. But let's not sell if and when the dips happen. As investors out here, guys, think bigger, okay? Don't get caught up in the hype of, oh my God, prices are gonna come down, maybe double digits, which we're gonna get to in a minute, what CMHC says. They're the biggest critic of them all. We're gonna talk about that. But don't get caught up in, I gotta dump it before I lose my value. Guys, this is real estate. This is a fixed asset. First of all, even if you wanna sell it, you think you're gonna sell it at the bottom, your time delays are so long. And this is the reason that prices can remain kind of sticky, right? Even though you see a fluctuation in things like employment, it doesn't affect the real estate market immediately. There's a time delay, which again points to the faster you can act, the faster you can jump before everyone else does. But of course, things like tenants can slow that process down. But instead of looking at when you can sell to get the hell out of Toronto, maybe start looking for deals as they come up. You guys know, as savvy investors, you don't need to sell that place to get another one, do we? Especially if you've been in the market for any length of time. Well, we are also, as mentioned, going to be sending out a pre-power of sale deal probably tomorrow in the next day or so. Make sure you get on the list as soon as possible. So it's in Scarborough. It's a 4-bedroom detached home. They're prepared to take an offer of $750, and the property on the market today, if you just threw it up there as is, would float around $807,000. And these deals will continue to cross our desk, and I'm going to continue to share with you investors out there, because at the end of the day, whether inside of the suburbs or inside the city, outside the suburbs, doesn't matter. Show me the money. Who's with me? And I also heard another concept, this idea of interest rates going down at 1%, the 1 to 10 ratio. If you get a 1% drop in interest rates, it naturally would mean a 10% increase in price. Does that not line up with what we've been experiencing? So maybe the interest rates dropping has been a big cause of all of this. And of course, if really the prices aren't dropping, they're going up, and we're not experiencing power of sales, really what we're seeing a consolidation of wealth among high net worth individuals. You guys who qualify for these super low rate mortgages are beating out everyone else that's struggling with employment right now. And the shrinking of the middle class continues. But just like I fell head over heels for my lady just a few years back, so too will our real estate market, according to CMHC, right? Look, like any good relationship as investors, we need to know the good and the bad about our business. And so before you go out and say, I do, don't be afraid to ask tough questions. Sweetheart, am I the only one you've ever made love to? Of course. The others were at least 9s and 10s. All right, so we're going to talk about CMHC because they're expecting a fall. They are expecting a fall. Well, how bad will the fall be according to CMHC? Well, a BNN Bloomberg article came out and it says this: house prices will fall even if worst case scenario is averted. Because we get this range, right? CMHC, they don't just say, oh, prices are going to come down 18%, even though it would seem that that's what they said. They said, no, prices are going to come between, the single digits, 9 to 18%, somewhere in there. But even, this article is saying, is even if we don't get the worst case scenario of 18%, we're still going to see a fall. So in any case, things suck and get out of here. Don't forget to get that insurance if you're putting less than 20% down. Canadian Mortgage and Housing Corporation President and CEO Evan Siddall is warning the domestic housing market isn't out of the woods just yet. In an interview with BNN Bloomberg, Amanda Lang broadcast Thursday, Siddall said that while the most bearish case for home prices doesn't seem likely to come to pass, he still sees a price decline by just shy of 10% due to the economic shocks of the COVID-19 pandemic. So CMHC, what they're saying is not that we're going to see an 18% drop. More likely, we're going to see a 10% drop. The number of people, this is his quote, the number of people on income support, the number of people on mortgage deferrals means that at some point, probably earlier next year, through the middle part of next year, probably later, there will probably be a negative adjustment in house prices. That's like a direct quote. He sounds like he's stammering a little bit. In general, we think high single-digit percentage negative adjustments is what we can expect in most markets. Well, Siddall told BNN Bloomberg various income supports measures implemented by the federal government has helped the Canadian housing market avoid the worst-case scenario. No duh. And everyone, both sides, if you remember, liberal, conservative, however far you are, wherever you're located across this great nation, agreed, we need support. You want me to stay home from work? Pay me. Pay me. This is very much a path-dependent forecast, he says. That was the pandemic was going to be horrible, deep, and it's been pretty bad, but government income support, government fiscal support, government monetary policy support have helped alleviate some of those pressures. We're going to talk about some of those numbers in a little bit. But he's right. He's right. It did. However, Siddall warned that the looming reduction of federal support will lead to higher unemployment and further lost income, deflating home prices. Do you hear what the problem is here? The lack of federal support. As federal support pulls back, our market has no legs. This is what he's saying. Ultimately, what it does is it requires economic adjustment, and in some businesses, there will be unemployment that results, he said. And unemployment is the kind of thing that drives prices lower. And we've seen a slowdown in the reduction of unemployment rates too. John Passal's had an interesting Twitter talking about this article, which I thought was adding great value. He said this: CMHC's their worst case scenario is 18% decline in house prices. It's unlikely, but we may see a decline in the high single digits. House prices are up 13% in 2020 over 2019. So a single digit decline would just give up part of this year's gains. I love that point. Let's not forget the success we've had this year and be completely freaked out by the worst case, not the worst case, but now the new worst case, because their assumption of loss that from the most critical person analyzing or organization analyzing our market is saying around 9 to 10%. And we actually saw that same line from Moody's. Same thing. Unless their base average price period is still Q1 2020, which would mean they think prices will fall by mid double digits from today's higher prices. But something tells me the goalposts have been moved and their forecast is now based on today's higher post-COVID prices. I think so too. That's my thought. We don't know for sure. We don't know much of what this guy says and what comes out of his mouth. But I highly doubt he's keeping his forecast from Q1 2020 as well. And what that means, if that is in fact the case, is that if you were to have hypothetically bought a property last year, with the gains you experienced this year, minus the declines that could happen in a worst case scenario next year, you're still going to be ahead. How do you like sitting on the sidelines now there, Better Dwelling? All right, let's do some hot topics. Ready? Hot topic. We're going to talk about government support. We heard what Sadal had to say about government support. So what are some of these things? If the crash will happen when the government support ends, then you're going to be waiting for a while. Because when we look at the numbers, in fact, there was a publication from Steve Saretsky on Twitter, and it was just this little chart, Bank of Canada mortgage bond purchases, and he's mapping out the purchases. It's unbelievable, guys. And Walter Bloomberg commented below, Canada's budget deficit for April to July sits at 148.58 billion. Versus 1.6 billion deficit a year ago. Holy smokes. When you look at these numbers, it looks like it's almost at zero compared to where we are now. We're talking $10 billion almost in support through these buying programs. Almost every month it looks like. This chart, it looks like a reverse roller coaster ride. If this thing came back down, I don't think it can. I really don't think it can. And the point is we're spending money out the hoo-ha, and that hasn't stopped. Our economy has adopted a government buying program at this point, and it's going to cost a lot, but it's also kind of nice to feel wanted. It's better than, no, sweetheart, nobody wanted you. Thank you for the adoption, Daddy. All right. Okay, so let's talk a little bit about CERB, because CERB is obviously one of these government supports that come directly to your bank account. Well, speaking of celebrating my happily ever after, not all fairy tales begin with once upon a time. Sometimes they begin with, if I am elected, which brings me into politics. Just the last podcast we did, literally days ago, I pretty much said we're not going to have a federal election because the NDP are going to do whatever it takes to get it done. Well, it seems like the Liberals did too. And although they're not going to extend CERB, which was a request of NDP, they're kind of extending CERB. Right? This is just politics at its finest. We're going to bump the amount from $400 a week to be in line with the CERB at $500 per week, which gives exactly the NDP what they requested from them. They also were asking for sick leave, which was kind of in there as well. There was a quote that came out from Singh, the NDP leader. We're very optimistic about the outcome of this negotiations. Things are looking good. And I know there's many people who fall through the cracks, I'm sure, and we've seen articles about that, but don't be deceived, guys. CERB isn't ending. It's just getting a bit of a facelift. And that said, federal election probably most likely will not happen in 2020. All things could go crazy. You're going to hear it here if they do. But as of right now, it doesn't look so good. But did you know there's been a lot of questions as well at the provincial level on whether an election would be called? We haven't talked about that as much. And it all has kind of stemmed from the PCs reaching out and getting a whole bunch of these party members. They're running around getting these members of provincial parliament. And so it's got everyone wondering, hey, are you going to call an election all of a sudden? Well, Ford insisted several times on Friday, that is yesterday, that actually that's 2 days ago now. What date am I? That the next election will be held on the scheduled date of June 2nd, 2022. And he has no desire to call an early vote because the Progressive Conservatives has a 4-year mandate. So sources from the Liberals are saying, well, they feel like he's kind of readying himself, and all signs appear to be showing an early election. They're pointing to these things. They say that they've stepped up fundraising campaigns. They've been doing campaign-style tours through Ontario in the summer. No wonder, because of COVID, right? And fast-track nominations as reasons behind the speculation. These are some of the reasons, but the big one here is that recent polls, however, they suggest that despite the economic hardship, the Premier's overall pandemic response could deliver an electoral windfall. A recent survey by the Angus Reidus Institute found 45% of decided voters said they would cast a ballot for the PC party, up from 36% in February. Remember how everyone used to hate Ford? All of a sudden they like him? And all it took was COVID. NDP are a distant second at 25%, the Liberals at 22%. And the Greens, yes, they're there too, at 4%. The Premier's personal approval rating now sits at 66%, up from 31% in February. But I don't think the province will call an election because it's still a risk, right? Things can change in a snap. We don't know. I mean, you know what the snap did in the Avengers. Or what happens when someone snaps in your marriage? Namely, half your stuff is gone. So let's look at the buyer sentiment. I want to take a couple polls here. There was one that was done by John Pisalis on Twitter. How likely is it that Toronto's area home prices are overvalued? And 5.8% said low, 17% said medium, and 77.2% out of just under 1,400 votes said high. So a lot of people, you guys agree that our market is overvalued. And he said this, note overvalued when compared to household incomes and or rents. So he's looking at it the same way that we do. And yet even still, people would say it's overvalued. And with the way that rents have been going down, even more so are they overvalued. We would need, if prices were to follow in line with the drops in rent, if that was what needed to happen for the sake of affordability or removing this overvaluation, they need to come down quite a bit because you're seeing the rent drops. We're seeing them year over year. Forget the increase in price in rent, in condo sales, even in the price of condos. Look at just the drops in rent. The amount of drops you need, you're seeing double digits in order to get it to those levels. So affordability is getting worse. And I did a little poll myself just for fun a couple weeks ago and asking people, where do you think people should invest if they're going to get the most equity growth in the next 5 years? 33% said Toronto, 67% said the greater Toronto area. So even you guys are running to the burbs. Good for you. Thank you for leaving any of you who did vote. I appreciate it, and I think it adds a lot of value to our listeners. Another hot topic, Ontario to close all strip clubs, limit hours of bars and restaurants as coronavirus spreads. COVID is still making itself known out here, and that means that the new rules, which take effect on Saturday at 12 o'clock, which is done now, requires bars, restaurants, and nightclubs to stop serving alcohol after 11 o'clock. Also, for those small amounts of you that want to go out and venture to the strip clubs, I'm sorry, you're going to have to wait. Strip clubs are closed too. The Ontario Premier, Doug Ford, said the decision to limit bar hours was made on the advice from his Chief Medical Officer of Health. Well, if we're going to protect everyone's health, why do we stop there? And I guess this is the running question is when and if we will ever approach stage 2. There's a lot of controversy on what that looks like. You don't need to be in the real estate market to know that that's a conversation. We'll talk about what impact that would have with real estate as time goes on, as these announcements are made, but we need to keep our finger on the pulse because that could mean a buying opportunity again, but that obviously would be far more outlived shortly. What am I trying to say here? It would happen way quicker because people know there's going to be a bounce, or do they? I guess that's up to you. All right, let's go to our last topic here, talking about vacant homes. We're not going to talk about the taxes coming in, but I want to talk about the debate on are vacant homes blocking supply. It's my view, personally, that all things equal, an extra tax, like marriages and fat people, they don't work out, right? But maybe this time things will be different. There was a number here. Out of the 18,000 condos that were listed for sale in Toronto since April, 43% of them were vacant. That's up from last year at 1/3 of units were vacant. So we're seeing far more units that are vacant selling. Most investors are holding on to their units, but some are cashing out. But there's a comment here that I think is totally valid, and the counterpoint is most are only vacant because the last tenant has gone. When a tenant leaves, it's an opportunity to sell if the owner was considering it. Don't assume that these vacant units in the study have been vacant prior to the sale offer. And this is such a good point, right? It's such a good point that just because it's vacant doesn't mean anything, especially when renting is so difficult right now. But do we actually need rental units? Because everything seems right now to be in favor of the tenant, right? The reality is we don't know what's coming. Don't get married to the idea of having unlimited rental options in the city. After all, marriage is like a deck of cards. In the beginning, all you need is 2 hearts and a diamond. By the end, you wish you had a club and spade. That's gruesome. Well, there's a Globe and Mail article talking about the future issue. Studies suggest Toronto's rental shortage will skyrocket in the coming years. Namely, we are facing a shortage of 200,000 rental apartments. For those of you who are thinking, you know what the hell with this rental thing? It's impossible. The government's, they're choking me out. I got to get out of here. There's no more demand for my rental unit. Well, you're going to regret that decision in a time very soon. There's another comment from Sleepy in Toronto. Thank you. I think this is a fantastic comment. I know there's a big increase of supply in the condo space, but what percentage do you think are double listed both for rent and sale? Maybe it isn't as bad as it seems. It looks bad if you look at each category in isolation. Just a thought. And on a side note to that, that's very difficult to calculate. It's a great comment. I don't know what that number looks like, but it absolutely is happening. I'm seeing it happen. And even if they're not listing the lease for sale or the lease on MLS, they can still be listing on third-party sites. So it's very difficult to track what those numbers look like. If any of you have stats that kind of explain that to us a little bit, then please send it in. But the debate continues on, do we really need a vacant home tax, or is this just kind of a mirage? It's a political move. We're kind of following Vancouver. It seems like you're going to support the government because you're going to get all this tax dollars. It's going to be great. But is it actually going to work? And is there an actual need for it? Anyways, interesting thoughts today coming from Watson Estates. Again, make sure you hit that list. Make sure you get on our investor list if you want access to these deals. We're going to continue to send them out. If you're a realtor, feel free to jump in too. I get some realtors sending me comments, hey, can I get on this? I want to look. That's fine, guys. That's fine. I can send you a property up north. If you see the deal and you like it, then we've got contacts set up. We're set up to deal with it. We're familiar with the markets. We've got agents trained and ready to help you. We've got systems in place, including property managers, and we're ready to go. But in the meantime, I'm going to go celebrate 6 years of marriage with my high school sweetheart, which, as I think about it, may not come off as such a great thing in the next 10 years, given all the homeschooling that's probably going to take place. But seriously, guys, we're so blessed. We're so happy. I know the quarantine has ruined many marriages, but ours is still going strong. Just the other day, I woke up to my beautiful and loving wife holding a pillow tightly over my face to protect me from the coronavirus. I'll leave it there, guys. I hope you have a fantastic week, and we'll catch you next time. Take care and keep it real.